welcome to our latest deep dive. We're taking a look at Election 2024, the tax talk you can't miss, from YCPE Insights.
Published just a few days ago, right? October 1st.
That's right. So let's unpack what this upcoming election could mean for you.
For our bottom line, basically.
Yeah.
And you know the article, it jumps right into it, doesn't it? Talking about this economic landscape.
And they use this great analogy of a Ferris wheel on overdrive.
Yeah. Which I think a lot of us, really resonates. You know?
Well, absolutely. It feels like 1 minute things are looking up and the next minute you're like bracing for a downturn.
Exactly.
Planning for the future feels like trying to hit a moving target, you know?
It really does. And this unpredictable climate, it's all that many young professionals have ever known, which I think is interesting, right, to think about.
It is interesting, yeah.
Barry Melancon, CEO of the AICPA.
Okay.
He's saying that this constant state of flux, this is the new normal.
Which is a pretty, I don't know, that's a pretty sobering thought.
It is.
To kind of grapple with.
Yeah.
And then on top of that, it's like, as if navigating this economic roller coaster wasn't tricky enough.
Right.
We have the 2024 election.
Looming,
yeah. Adding yet another layer
uncertainty.
Of uncertainty, yeah.
Yeah, and the article really dives into a scenario that I think is giving a lot of people pause.
Okay.
And that is this very real possibility of a split government. So imagine, just picture this.
Okay.
Republicans, they seize control of the Senate.
Okay.
While the Democrats, they retain a firm grip on the House.
Talk about a recipe for gridlock.
Exactly. And Melancon, he doesn't mince words here.
Yeah.
He highlights just how slim the margins are likely to be in both chambers, passing any substantial tax legislation in that environment.
Right.
It's going to be tough.
Yeah, good luck.
Yeah, exactly. So are we talking potential stagnation when it comes to long-term financial planning?
Well, it sounds like it, right? I mean, that's a pretty big deal for anyone trying to make investment decisions, plan for retirement.
Huge. And it makes understanding the tax platforms of the leading candidates even more crucial. The article's focusing on the two frontrunners, of course, former President Donald Trump and Vice President Kamala Harris.
And I mean, let's be real, their economic visions are about as different as their campaign slogans.
Night and day. It's like we're in a political Shark Tank.
Oh, I like that analogy.
With each candidate pitching their own economic game plan, right?
Yeah.
You've got Trump championing this idea of a manufacturing renaissance in America, leaning heavily on tariffs and domestic production.
And then you have Harris, who's really advocating for what she calls a more pragmatic approach, focused on things like middle-class tax cuts, making child care and elder care more affordable, that sort of thing.
Yeah, they're coming at it from very different angles. And the article highlights this key difference in their approaches, using, I think, a really interesting real-world example.
Okay.
During a campaign rally in Mint Hill, North Carolina, Trump promised to revive the local furniture industry, bring back those manufacturing jobs.
Which, on the surface, that sounds like a win for that community.
You'd think so, right. But, and this is key, the article points out that the crowd's response to this promise was, well,
underwhelming.
Lukewarm at best.
Interesting.
And it underscores, I think, a really crucial point here.
Okay.
While tariffs are often positioned as this way to protect American jobs, the reality is, well,
it's a bit more nuanced.
It's much more complicated.
Yeah, because those tariffs often come with, like, unintended consequences.
Right.
Like higher prices for consumers.
Exactly.
Okay.
And, Harris has been very vocal in her criticism of Trump's tariff policy.
Okay.
In her speech to the Economic Club of Pittsburgh, she even went so far as to call Trump, quote, a loser on manufacturing, accusing him of getting played by China.
Wow.
Strong words.
It highlights just how differently these two candidates view the role of government in the economy.
100%.
Right.
Yeah. And this fundamental difference in philosophy, it extends to their tax plans as well, which maybe
let's dig into that.
We can unpack those a little bit further, yeah.
Let's do it. I'm ready to unpack some numbers.
Right.
So we've got Harris advocating for a regulated free market, targeted tax cuts.
Right.
And then Trump pushing for this manufacturing resurgence fueled by tariffs.
Right.
What does all this mean for, like, the average taxpayer?
Yeah.
Where do their tax plans differ? Or, maybe even surprisingly converge?
Right. Well, let's start with a big one.
Okay.
A significant point of uncertainty for businesses right now.
Yeah.
Bonus depreciation.
Okay.
So currently, businesses, they can deduct a big chunk of their equipment purchases up front.
Right.
But that perk, it's set to phase out starting in 2027.
So that's a potentially big change coming up.
It's a big one.
Yeah. Yeah. Does either candidate address this, like this looming deadline?
That is the million-dollar question, isn't it?
Right.
And the article, unfortunately, I don't think it offers a clear answer, so... Okay.
We're left with a big old question mark here.
So more to come. Stay tuned.
Right, exactly.
Yeah.
Will Harris let it expire? Will Trump extend it? Will either of them propose like a complete overhaul?
Right.
Who knows?
Yeah, it's a lot.
It's enough to give any CFO a migraine, that's for sure.
Yeah, talk about just like another layer of complexity to an already very complex.
Exactly. And it doesn't stop there.
Okay.
The article also touches on these, other kind of perennial tax conundrums that we see. They kind of surface every election cycle.
Mm-hmm.
Things like R&D deductions, international tax rules.
Right.
So these are issues that have been debated,
Ad nauseum.
Ad nauseum, exactly, for years and years with no clear consensus in sight.
So more of a stay tuned situation for those kind of really crucial areas.
I think so.
It sounds like regardless of who wins, businesses, tax professionals, they're going to be doing a lot of nail biting.
Oh, yeah.
To see how these policies shake out 100%.
Okay.
Now, shifting gears a little bit to individual taxes.
Okay.
The article spends a good deal of time unpacking the potential impact on high earners.
Okay.
Specifically those,
The millionaires.
the millionaires.
The millionaires and billionaires, right?
Exactly.
A perennial hot topic in any election year.
Always.
Are millionaires and billionaires, are they going to be seeing red in their bank statements?
Well, it depends on who you ask.
Right.
Harris has made it very clear
Right.
that she believes high earners need to pay, their fair share.
Okay.
One of her key proposals is raising that long-term capital gains tax rate to 33%.
Okay, so a little lower than what was kind of initially floated during the Biden administration, but still a substantial jump from where it currently stands.
Big jump, exactly.
Yeah.
And this is where things, I think, get interesting, because the article points out that Trump hasn't really taken a firm stance on this issue.
Okay, so we're left to kind of decipher the vague pronouncements and campaign rhetoric.
Exactly.
Which, knowing Trump's history, could mean anything or absolutely nothing.
He really could.
Right.
Yeah, we'll have to wait and see.
But you have to imagine that any significant changes to capital gains rates are going to send ripples through
absolutely.
the financial world.
Huge implications, yeah.
Yeah.
And then, of course, there's the issue of the carried interest loophole.
Okay, for those of us who haven't memorized the tax code, remind us what this loophole is and why it's such a big deal.
Okay, so in a nutshell, it allows certain investment fund managers to classify a portion of their income as carried interest, which is taxed at a lower rate than ordinary income.
Gotcha, okay.
Democrats, they've long argued that this is an unfair tax break that disproportionately benefits the wealthy. Republicans generally disagree.
So another area where the election outcome could have a really substantial impact.
Absolutely.
Particularly for those in the financial sector.
Tip 10.
It seems like this election is shaping up to be like a really pivotal moment for tax policy.
It is.
With potentially long-lasting consequences.
Long-lasting.
Yeah, and, reading through this article,
I
don't know about you, but I kind of get this sense of...
Oh, tell me.
Deja vu.
Yes.
Like we've been here before.
It's like we're back in 2017... revisiting the same debates about the SALT cap, corporate tax rates, international tax policies. It's like
we're trapped in this.
It's like we're trapped in some kind of tax policy time warp.
Exactly, a time warp.
Right.
That's a great way to put it.
And the SALT cap, for instance, that puts a limit on how much state and local taxes that individuals can deduct from their federal taxes.
Right, which tends to disproportionately affect those in high tax states.
So are we saying that depending on who takes the reins, some taxpayers might see those SALT deductions reappear on their tax form?
It's definitely a possibility, yeah.
Okay.
Harris has, she's hinted at wanting to repeal it, or at least, raise the SALT cap.
Oh.
Trump, on the other hand, seems fine with leaving it as is.
Oh, it's like
deja vu all over again, right?
Total deja vu.
Right.
It seems like certain tax debates never really go away.
Yeah.
They just sort of resurface every election cycle, like a political groundhog or something.
Right, exactly, like clockwork.
But here's the thing.
Yeah.
Even if we could, perfectly predict the outcome of every single policy debate, there's another kind of wild card that we haven't even talked about.
The elephant in the room, you mean? The AI revolution?
Exactly. And it's not just coming.
Right.
It's already here.
It's here.
It's reshaping industries as we speak.
Absolutely.
And the accounting profession is, I mean, it's no exception.
Yeah.
And I think, Barry Melancon, who we mentioned earlier.
Mm-hmm. AICPA CEO.
Yeah, exactly. He had some really interesting things to say about
He did.
About the impact of AI.
Yeah, and I think his perspective is really interesting.
Okay.
Because he argues that while AI and automation, they're going to impact the job market for accountants, he doesn't see it as this like totally negative thing. In fact, he suggests that AI could actually free up accountants from a lot of those like mundane, repetitive tasks.
The stuff that nobody really wants to be doing anyway.
Right, exactly. And allow them to really focus on that higher level work,
So instead of replacing accountants entirely, AI becomes this like really powerful tool that can actually elevate their role.
100%, yeah.
That's an interesting way to look at it.
And I think it's a much more kind of, realistic and maybe even optimistic way to approach it, you know? Because if we think about it, imagine a future where, AI is handling a lot of that, like data entry.
Right.
Number crunching, all that stuff, and it frees up accountants to really focus on providing strategic advice, analyzing trends, right? Helping businesses navigate what is, let's face it, an increasingly complex financial landscape.
Which makes a lot of sense. It's about working smarter, not harder.
Exactly.
Right, like leveraging the technology to enhance what we as humans do best.
Yeah. Which is the things like, critical thinking, problem solving.
Right, the stuff that
building relationships.
The robots aren't so good at.
Exactly.
Yeah.
Exactly. Right, exactly. But here's the catch. To really thrive in this, AI-powered future, accountants are going to need to adapt.
Okay.
They're going to need to embrace new skills.
So what are we talking, like data analytics?
Absolutely. Data analytics, technology consulting, cybersecurity.
Wow, okay.
It's about becoming more than just number crunchers, right? It's about becoming those trusted advisors that can really guide businesses through this, rapidly changing world.
Yeah, it's a lot.
It is. And that kind of brings us to I think, the heart of this whole conversation.
Yeah.
Whether you're, all in on Harris, all in on Trump, or, maybe you're just on team, please let my portfolio survive this election. It's a big one.
Yeah.
It's a chance to really reflect, not just on those, specific tax policies that we've been talking about, but on the kind of future that we're trying to build.
It's a much bigger question than just...
Bigger than taxes, right?
Yeah.
What role do we want the government to play in the economy? What are our priorities when it comes to taxes? What does fair share actually mean?
It's a really interesting question, especially in the context of
especially as things are changing so fast.
This rapidly changing world that we're talking about.
Right, exactly. And these are questions that I think, they deserve.
They go way beyond.
They go way beyond the pages of this article.
Yeah, they do. And for me, they deserve a lot of...
They deserve some serious thought.
Thoughtful consideration from all of us,
100%, yeah. And as you're looking at the candidates' proposals, as you're thinking about their potential impact on your own life, remember, knowledge is power.
It really is.
Right. So stay informed, stay engaged, and most importantly, stay adaptable.
Be ready for anything.
Because the future is rarely predictable. But if you can stay informed, if you can be proactive, you can navigate those twists and turns with a lot more confidence.
That's great advice. And on that note, a huge thank you to you, our expert, for, guiding us through this
Happy to be here.
Complex landscape.
That's always a pleasure.
And to our listeners, thank you so much for joining us on this deep dive.
Yeah, thanks everyone.
Remember, these decisions, they have a ripple effect on all of us. So stay curious, stay informed.
Absolutely.
And let's make our voices heard.